Solo Scrooge, sending peace and blessings to you all out there. Hashtag Solo Nation. Appreciate you all for the love and support of the channel. Hope everyone's well. Good morning, good afternoon, good evening to wherever you are, whatever time it is in your region. XRP, Sologenic, Coreum. We know the future consists of tokenization, interoperability, on demand liquidity, etc. So today, just going to run over the Sologenic chart, the Coreum chart, XRP chart quickly, and then I'm going to leave you with a clip that you can watch after. I'll leave you with a clip from the Senior Director of Engineering at Ripple, and you can see what he's talking about. So my people, as it stands, Sologenic, we're on 15 cents, 15.1. Let's look at the 30-minute time frame. So as we can see, we're beneath this uptrending support line. We're beneath it. The pattern has been support resistance for some time. We've been in this pattern, as I've shown before, but now we've gone beneath this uptrending white line, and we have fallen beneath it before and then came back over it. We wicked down, but what I'm thinking, we'll have to see how the chart plays out. But remember, I said before, my people, the Sologenic chart, we want to see a significant rise to invalidate this bear flag, because this is the bear flag here. This is a bear flag, and if let's just have a look. If this bear flag was to play out, I'm not saying that it's playing out, that it's going to play out. Really, we want to invalidate the bear flag pattern, but if this was to play out, just say if it was to fall there, then if we was to fall from here, this would be the target. That 8 cents mark would be the target. Hopefully, we'll see. What we want to do, we want to break back in to use this uptrending white stroke blue line as support again, and then carry out the pattern. So we're going to see how that goes. We're going to see how it goes. Underneath support, if this does fail, our underneath support is at 13.429, so 13 cents. That's our underneath target. Our upper resistance, if we break above it, first resistance is at 0.1788. The next resistance is at 0.19806. So we want to we want to come back in and then carry on the trend of support, resistance. And I keep repeating myself with the support, resistance, but that's where we're in, and we want to carry out that trend. So we'll take a look at that during the day, see how that plays out. But as it stands, in the 30-minute, we are beneath it. We are actually below it, but we'll see. We'll keep an eye on that, definitely. Let's have a look at the Coreum chart as well. So the Coreum chart, it's core season, my people. Of course, the Coreum chart, could this be a W reversal that could lead us to the upside? Currently, we're being supported at the 0.26 0.2608, and we have an upper resistance of 0.2969. But we wanna push past this resistance here to test this resistance at 32 cents. If we can get above this resistance at 32 cents, which lies on the white line, then we can get somewhat bullish, because this line has been heavy resistance and heavy support for a while. So we'll see how that plays out. So upper resistance 0.269. Ultimately, we want to get over the 32 cents. Ultimately, we want to get over the 32 cents to get bullish. And underneath we have the support 0.2608, 0.2447, and 23 cents. But we're up 8% on the day. So Coreum's looking good. It's looking good. We're up 8% on the day. So I'll keep you updated with that throughout the day, my people. We'll take a look at the XRP chart quickly. XRP. So we've got support. We're being supported at the 0.49417. We've got upper resistance at 0.52824. Also 0.54230 if we can break past that 52 cents. Then the 55 cents. So this is what I'm seeing according to the charts. This is our support and resistance levels that we're playing in between. And I'm not a financial advisor, my people. This is the charts according to how I see it. Underneath the support of 49 cents, we have 0.45 cents, the 0.45594, the 0.44425. So we'll see how it goes throughout the day. Remember, my people, the future consists of tokenization, interoperability, and on-demand liquidity. The Trinity, XRP, Sologenic, and Coreum. Appreciate you all, my people. I'm going to leave you with this clip from Ripple. I'm Solo Scrooge with the Solo News. Like, subscribe, and share. And I'll catch you on the next one. Peace.
And so, again, I think through the lens of that use case, and what we've even seen with our on-demand liquidity product, 3 years ago, crypto markets were much smaller, way more, the impact of the volatility was much bigger on the product experience. But as we've seen the utility and the kind of enterprise adoption that we've had with on-demand liquidity, the markets have matured. So even though we've had, continued volatility, the scale of that volatility relative to the types of payments it can kind of sustain is much smaller. And so I think just that continued growth to utility kind of brings that certainty that kind of makes less need for volatility.
What are some of the biggest gaps you see in the current environment in terms of what needs to happen to really further this along?
Yeah, so tokenization specifically, again, I think it's that identity piece. So, I think that's where a lot of people roll their eyes when you talk about tokenizing real estate. It's like, it's a house, how are you going to represent that? I think we need to solve that. I think that's possible and feasible with the technology, but doing it well and really making it kind of possible for non-crypto experts to do that is key. And I think interoperability is the other one that I think we also have elements of, but that's kind of the benefit you get from once, much like the internet, when everything is a packet, whether that packet is a video or, a web page, the fact that they're all packets and can move kind of interchangeably to agree, we want to make sure that that same interoperability happens for all these assets that get tokenized.
I hear a lot of talk about UX. What do you specifically think on that front? Is it easy enough to use right now, or what do you hope happens?
No, I don't think it is, especially for people. Like, it's like any emerging industry, if you go back to early days of the internet, it's built for the builders first because we don't know any other way to do it. And so it's hard to manage. It's hard for folks that, aren't, experts in that field to do it. And so when I talk about UX and what we strive to do in the products that we offer is, you don't have to be an expert in the technology to leverage it for your business problem. In many ways, that's the genesis of Liquidity Hub. It's recognizing that if you want to be building a business that involves crypto, do you have to be an expert all the way up and down the stack, all those things, or can you focus on that specific customer you have in mind? So one of our early customers is an NFT, a company called Supermojo that kind of facilitates buying NFTs for customers. They obviously already know crypto, but they don't want to specialize in sourcing liquidity and kind of managing that and their treasury. They'd much rather focus on that last mile delivery of the NFT and that experience. And so when I talk about customer, the UX element, it's really about making these patterns that we've identified as builders friendly for people that don't want to be the expert.
And what are you thinking about in terms of security, especially if physical assets start to get tokenized? Does that raise any additional concerns, or what's kind of on your mind about that?
I'd say it's the same. It doesn't really change. Tokenization doesn't change the importance of security. I think maybe the way in which you do it for these assets is a little bit harder, but I think that comes back to the identity angle. But I think that is also where there's going to be this spectrum. There's the not your keys, not your crypto end. There's the I don't want to hold my keys end, and there's businesses that want something in between. And so I think we need to make sure that we strive to meet folks where they are and offer them that.
Now, one of the things I think we've seen over the past year is, the worst of the worst, and especially when you get into crypto lending and a lot of this excess leverage, and which has happened before in traditional finance markets. But are you worried about that this could just spread and it's going to give the whole industry a bad rap? Because tokenizing an asset or an identity is very different than a coin that is being traded and lent out. So, how should the industry be approaching kind of this, non-crypto native people who kind of may want to write the whole thing off?
Right. Yeah. So it's unfortunate when bad actors or kind of bad bad outcomes kind of color the whole possibility of the technology. But I'd also say that it doesn't mean that technology is not possible or relevant. I think it's then just incumbent on us as builders to make that a key output or a key part of what you're building. And again, I think that comes from starting from the use case and the utility. For your customer to use this, and for us, for an enterprise customer to use it, it needs to be scalable, it needs to be robust, it needs to be secure, it needs to be resilient, and it needs to be a way in which that's demonstratable to a customer. And so, at least for these specific cases where we've had, issues in kind of either DeFi or kind of the TradFi in the space, I think they're just evidences of just not taking that seriously enough, and just part of doing it better.
Are you worried about what could happen in terms of new regulations? What do you hope lawmakers are thinking about? Do you sense a lot of fear in the industry on this front?
I think at least for us, and I think through the industry, I think there's not a no regulation world. I think it's important to have regulations. In fact, the benefit of good regulation is it makes it easier to innovate and easier to deliver. I think as we see in the US, there's been stalled in that sense. There's regulation by enforcement, which is slow and inconsistent and hard to decide. We've seen better regulatory frameworks in other countries, in Japan, UK. And so I think much like the internet in the US, a lot of the dynamism and entrepreneurialism in the US was able to build the internet because we had a framework that allowed innovation and kind of guided innovation. I think we want that here. And I'd say the last kind of year, especially the last 6 months, is we need that. It's important to have those elements, but not in a way that stifles the growth, in a way that kind of makes sure that the toddlers and now emerging kind of, the industry that we are, that's kind of grows up to be that teenager and that adult, but with the guidance to kind of explore and learn along that journey.
Do you view that almost as a competitive risk to the United States?
Oh, absolutely, absolutely. I mean, so that would be the one impact I see is there are definitely, there's lots of innovation happening outside the U.S., which is always great and fantastic, but I'd say the scary part is maybe doesn't seem to be as much ability in the U.S. to innovate at that same level right now, just because of this uncertainty.
Where would you recommend that a regulator in the U.S., where should they be looking, or who's doing it right, and while managing the risk of everything, but where are some markets that are kind of maybe ahead of the curve?
Yeah, so yeah, again, the couple I mentioned, at least where we're seeing that kind of in the UK, in Europe, in Singapore, in Japan. They're not all the same. They're still mix. But the US is still a leader at the end of the day too. So I think ideally, we can learn what we learn there, but then kind of make it better, and then see other countries continue that.
Okay, and going to your customers, that's always in times of difficult times. You want to, you want to listen to your customers. What are you hearing from your customers? What's the market demanding?
Yeah, so I'd say, for example, this Liquidity Hub product where I spend a lot of my time with my team, there's really two areas that we kind of have touched on already, but I'll kind of reshare. So one is that interoperability, and concretely for that is we have some set of customers that are very crypto savvy, crypto native. So maybe they're a kind of point of sale service provider that wants to accept crypto, pay out fiat to merchants. They need help on the fiat side. So they need some way to interoperate their crypto with fiat in a way that scales. On the flip side, we have other customers that maybe are 10 years in a remittance business, FX, traditional FX, and now their customers are coming to them with Bitcoin that they want to use in their flows. So how do we use Bitcoin? And so kind of when we talk about interoperability in the near term, it's really about those fiat on and off ramps with crypto for both directions. People that have crypto want out, people with fiat that want in. And we haven't really seen we see an opportunity actually to make that a better experience for them. And the other part is that usability front. So it's consistently seeing, kind of the enterprise customers that we've kind of adopted and kind of have become comfortable with kind of seeing our success, wanting to use crypto, but not being comfortable being an expert and taking that seriously as an enterprise. And so I think continue to invest in that usability angle and solving and making kind of the kind of back of the kitchen work a little bit less obvious to them as we're delivering.
What do you think up until this point has prevented that on-ramp between fiat and crypto? Because you think that should be flawless by now, right? So what's the bottleneck there?
Yeah, so I think what's interesting is we've done an okay job at the two ends of the spectrum. So there's the retail users with exchanges, there's work for them to get into the system, but there's ways in which they can get fiat in and out. The other end of the spectrum, there's now increasing institutional investments that are trading and kind of going back and forth in the space. And I think what's missing is, again, that middle of the spectrum where if you're either more frequent or larger than what a retail kind of a provider can provide, but you're also not massively scale institutional, or at least kind of have more kind of real-time settlement requirements than institutions. That's the missing gap. And so that's a thing that we actually had to solve with our cross-border payments product where it's remittance companies, it's increasingly non-FIs that have bigger flows that it's actually got to settle and go out the other side in fiat. And so we think that kind of angle of making sure there's sufficient pools of liquidity to support that, efficient feedback loops for the market to react to that. And then, of course, the regulatory clarity is kind of foundational.
Mm-hmm. So in terms of innovation around kind of those areas that you just mentioned, what are you working on, or what are you excited about, or what are you seeing elsewhere in the industry that you're excited about?
So a framing we have is kind of a set of crypto primitives that any crypto business kind of can need to build an offering. And so that includes these on and off ramps, or kind of interoperability, includes custody, so the security of storing your assets. It's kind of the compliance angle, which kind of subsumes the identity component. And then there's these liquidity pools. And so, Ripple is active in more of those than others. But I think what I'm most excited to see again, as it enables this tokenization, is really this compliance area grow. I think that's an area that there's a lot of, again, exciting foundational work in the industry, zero knowledge proofs, decentralized identifiers, but figuring out how we put those together to kind of get to that use case is what I'm really excited to see happen.
Yeah.